Welcome to the Investor Fuel Real Estate Investing Show, where I interview the nation's top real estate entrepreneurs, industry leaders, and other amazing entrepreneurs to help educate and inspire you to take your business and your life to the next level. My goal is to add tremendous value to you during every single episode of this show. If you get value, I'd love it if you subscribe on your favorite podcast player, subscribe on YouTube, and my very favorite, please share this with your community so we can impact even more entrepreneurs. Let's start today's show. Hey, everybody, welcome back to the show. This is going to be an interesting show today. I'm here with Alex Ottewell. We're going to be talking about his transition from real estate investing into oil and gas. There's a lot of similarities. He's an actual landman. So I don't have a TV show for you yet, but man, I love that show. In fact, I just watched the most recent episode last night. But Alex, welcome to the show. Good to see you.
Thanks. Appreciate it, Mike. Happy to be here.
Yeah. So we talked for a little while ahead of this. We've been running in the same circles for many years here. And you made the transition from real estate into oil and gas. And I know there's a lot of similarities, right? I don't think people realize how many similarities there are, but we're going to talk about your story and kind of that transition today. So before we jump in, why don't you just kind of give us some background?
Yeah. So I got into the entrepreneurial life at 19. Right out of high school, I started going to tax deed sales. It was a case of my dad had started doing it. He had kind of reset during the crash. You know, he had some stuff, not go so well. So he moved into tax deeds himself, and he said, "Hey, Alex, why don't you come to the auctions and, help me clean them up, right? Clean up these horrible homes." Because bear in mind, this was the time where, it was much more, far more people getting kicked out, but a lot more ugly houses. I mean, truly ugly houses in that time. And so I went with them. And the first 6 months, we worked well together, sort of. But like most father-son things, I got rebellious and I ventured out and got some capital, friends and family stuff. And I went for it. So it was a case of, going after, I like to target the low income stuff. That was always my thing throughout my whole career. Essentially, it's one of those things where you don't always want to play in the big pond. You don't want to be a small fish, big pond. So I went after the submarkets throughout Florida. So I was in the Hernando County, the Putnam County, the hillbilly areas of town. With that being said, it turned into me buying a lot of mobile homes on land. So that's where my nickname King of Trailers came in, because at the time, this is before, all the institutions wanted to come into mobile home parks. With a double wide on an acre, nobody was really buying those things. So they were calling me up like, "Hey, Alex, do you want that trailer? Do you want that trailer?" And it became kind of my core business model for quite a few years. 18 was around the time where the tax deed sales started getting a little difficult. Redemptions were going up, more. The problem with tax deed sales, in my opinion, is they work when the prices are suppressed or the economy suppressed. But when it hit that tipping point where, okay, I can redeem them for taxes, people started going directly to the people losing their homes and say, "Hey, I'll pay that off for you. Just give me a deed." And that kind of ruined the whole business, in my opinion. But 2018 went into seller direct marketing, and I started learning cold calling. It was a whole new thing. I didn't have a lead gen part of my business, because when you go to the tax deed sales, you get a list and you go look at them, and that's about it. So went into that cold calling. I had 8 people calling, and I was doing 2,000 leads a month, interested leads. And everybody's like, "Hey, how the heck did you do that?" I just had a good script. One of my secret sauces, and I'm not in real estate anymore, so I don't care. But I used to make all my cold callers female, and my acquisitions were male, and I'd have them be married. So when they're calling in, it wasn't like, "Hey, this is, 1, 2, 3 home buyer." This was, "Hey, me and my husband just bought a rental around the corner. Are you interested in selling another one? You sell your property." And that lowered, that entry. And especially with females, I mean, in my opinion, any kind of cold outreach is always better with females. People don't hang up on them as much. 2020, COVID happened. I realized that my Filipino cold callers were stuck at home, and somebody had mentioned to me, "Hey, can you train up some cold callers for me?" And I was like, "Yeah, I could probably do that. I'm not doing much." And I ended up turning it into a business. So I launched the business 60 days later, had within 90 days over 100 cold callers. And then I got Kevin Harrington to endorse that business indirectly. That's a funny story, but yeah, we did like a little infomercial thing and ran that and got it up to 220 cold callers within about a year or so. That business obviously had its own headaches as well, because cold calling's always had a lot of fun with the FTC and stuff. But yeah, that was, that's how I got into that. Middle of 22, I was in Houston, funny enough, where I live now, but at the time I was in Tampa for the living. And I woke up one day and I said, I don't want to flip houses anymore. So we'd done over 1,000 transactions at that time. And between a fix and flip and wholesale, I did some wholesale towards the end. I had a JV wholesale company as well. But yeah, I woke up one day and I said, I don't want to flip houses anymore. I had about 25 projects going at the time. And my assistant texted me and she said, hey, am I out of a job? And I said, no, we're just going to find something new to do. The rest of that year, I started advising for different companies. And essentially it was a mixture of plumbing, HVAC, electrical. I was looking to do an M&A type business, like a roll up of sorts. But then I
Yep.
discovered oil and gas and, I was chatting with a couple of people, didn't really get along well with the guy that I met. So I decided to go out on my own and do it myself. So I brought on a reservoir engineer and yeah, about 6 weeks after I decided to do it, I had an oil company. So long journey, but
Yeah.
that's how it started.
Well, we were talking about this a little bit up front. I've said this many times over the years that for real estate investors, like it's easy for them to pivot into other business. Oil and gas is unique. We're going to talk about that a little bit. But at the end of the day, all business is about building a team, having a very clear vision, having very clear goals, right? Putting the right people, processes, and systems in place. And it's always about hiring. It's about, not having a bunch of mind junk that you think you can't do something and being able to fight through
Yeah.
kind of the mental side of the business and having the right relationships and just understanding the economics of how everybody wins or how you can create scenarios where everybody wins. I mean, there's a lot of similarities. The widgets are different. I'm sure that oil and gas has some unique components to it that you'll tell us about.
Yeah.
Just talk about though, like maybe some of the differences and some of the things that are really honestly not that different.
I'll start with the similarities. I think that'll kind of, really help people. And, there's a land component there. So, where most real estate investors transact in surface land, in Texas especially, it's separated. So you have your surface, which is your farmers and whatnot, and then you have your subsurface, which is your mineral rights. And essentially, those mineral rights can get divided up into hundreds of different or thousands of different pieces. You can have so many different owners. If you can imagine over the last 100+ years, there's been great grandpappy had a bunch of minerals and then he passed away and gave them to his grandkids or his kids. And, it keeps going down. It's almost like a family tree. So you can start off with whole ownership of X amount of acres, but then by the time it's down here, it's 6, 7 decimal points out. So there's definitely a land piece there. Legality wise, we use purchase and sale agreements, almost like a real estate contract, but they're just a bit deeper. There's a bit more variables in there and whatnot, but
Yeah.
there's a purchase and sale agreement. I mean, we're transacting when we buy leases or buy wells in general. Those are done on a PSA. And I think a lot of it is there's regulatory there too, right? So, you have a building department and, certain HOAs and things like that. I mean, you do have regulatory in oil. The biggest difference between the regulatory and oil, it's more about just making sure that you're reporting your production correctly every month, your sales, and then also keeping up with the leases. You don't want to have any kind of dangerous materials out there, gas leaks, if you're on a natural gas well, oil spills, you have to report that kind of stuff.
Mm-hmm.
Things happen. I mean, I think people get a little bit agitated at the idea of oil and gas, but, in general as a environmental piece. But one of the things I think shocked me the most when I really got into it is how many products are made from petroleum. I mean, I never really thought about it myself.
Yeah. It's pretty much everything, right?
Yeah. I mean, you got 6,000 different product types, anywhere from makeup to, the asphalt on the road. I mean, there's, all sorts of things that are made. Plus natural gas makes up like a third of our electrical grid. So
Yeah. It's
yeah,
interesting because I obviously a lot of people have been watching Landman, so they think they all know the business a little bit now. What else is interesting for me is a few years back, it's probably been about 4 years ago now. My wife and I bought a ranch in East Texas. We bought 104 acres in East Texas, built a beautiful house on it. We have
nice.
events and stuff out there now. It's really, really pretty, but somebody else owns the mineral rights. So there's actually some oil production stuff on our property, which I don't love it, but it's like,
Yeah.
it was part of the package. Like I couldn't do anything about it.
Yeah. And a lot of those surface agreements come in pretty early. So you're kind of inheriting it on. And then what most people don't realize is once, there's the initial lease period, right? So they'll give you 3 years. Sometimes California's extended them now of like 5-year leases, but they'll give you 3 years to go drill your first well. Once that well is drilled, that lease runs in perpetuity because you're essentially producing oil from that rock. Now, what happens what they wised up with, the mineral owners later on down the line, they put pew clauses in place, which is pretty neat. So essentially what that means is, let's say I lease this 1,000 acres and I have this 1,000-acre plot and I've drilled a couple of wells and I've drilled them down to 10,000 feet, right? Well, my pew clause will say that after my 3-year period, I hold the rights to 500 feet above and 500 feet below where my wells are drilled to. But that means that that mineral owner now can go in and release to another operator to drill at 5,000 feet or another one to 15,000 feet. So they can have people hitting multiple formations. Essentially, the way the earth works is it's like layers of a cake, right? So different depths have different formations, different gas and oil deposits are in different depths. You know, me as an operator, I focus on wells under 5,000 feet. There's operators that only focus on deep lateral wells, 15,000 feet. Everybody's a little different. And this way, one set of acreage, 1,000 acres could be utilized for multiple operators, multiple depths. And all those leases are run forever until production stops. So it's pretty neat how the business has evolved when you look at it.
Yeah, I had a guy, I found, it's hard to find out who owns some of this stuff, right? And so there's, so far as I know, there's 2 operators on our property. I would have almost never seen them except for we've got like one pump jack on an area of our property. We've got a couple of tanks on our property, but I did find out who one of the guys was, and he agreed to come over so I could talk to him, because I was like, I just want to know who you are, like whatever, because they're coming on our property too. So, they usually come through some back gate. We never even see it. Honestly, I've never seen them other than the one time I asked him to, but it sounded to me like I was talking to a wholesaler. He's like, yeah, I can't remember the story, but he had like 30 wells around East Texas. And he's like, I literally just let the oil seep in the well all month. Once a month, I go by, flip the well on for 24 hours.
Yeah.
It pumps it to a tank. And then 2 times a year, I have a truck come and empty the tanks or something like that. And I was like, It sounds like I'm talking to just like literally a real estate guy, which it's got a lot of similarities, right?
Yeah. I mean, that's some low end. So it's called strip.
Well, yeah. And it's I think in our county where I'm at in East Texas is like, they used to have a lot of really high production. I don't think it's really high production anymore. And so that's kind of his model.
Yeah, they're called stripper wells. When they drop to a low level of production, they're called a stripper well. And it's kind of interesting because guys will do that, right? You can go out and get a bunch of individual wells and whatnot. It's hard to operate though. Like early on, I spent about the first year buying some test assets, and I'll tell you, I learned a lot from them. For one, there's a certain price point of asset you don't want to go below because you can't afford to maintain anything. If your cash flow isn't strong enough across a portfolio, you really have no money to spend capex on it, and then the wells just eventually deteriorate. So I learned that. And then another one is the deeper the well goes, the more maintenance cost you have in place. So it's kind of like real estate where, if I'm flipping high-end houses, everything costs a lot more, even though it shouldn't, but you're just paying a price because it's a high-end home.
Right.
The same thing here. So if I have a shallow well, if I wanted to pull a pump on a 2,500 foot well, it might cost me $3,000. If I want to pull a pump out on a 15,000 foot lateral, or do any kind of work over on a 15,000 foot lateral, it might cost me $15,000, So, it's crazy how much more expensive it is, but the machinery is bigger, right? So you got bigger pulling units. You need heavier equipment, so it costs more. Same as drilling wells. Yeah, the deeper they go, the more expensive.
So let's talk about your transition. Like, what are the things that attracted you to, like, a lot of real estate investors are focused on, they're pretty commonly focused on scaling or leveling up because, they want to take it from a job to a business.
Yeah.
Or some people move from single family into multifamily. Like, people are kind of moving. There's like this ladder of like the value chain, I guess. Like, what attracted you to oil and gas?
Well, I knew I was done with real estate. I hit a burned out point, and I also didn't like operating where I was, like in the sense that I liked buying cheap stuff and, basically fitting that market where you couldn't afford a single family. So you went down to a mobile home with some land, you got some intrinsic value there. It's a real asset, real ownership. And I liked that because it was a turn and burn model. It was really quick to go find stuff, but it was also quick to sell it. So I kind of like always playing in a sandbox where nobody else wants to play. And with oil, when I first really understood it and learned about it, I saw quickly how many wells are out there. So there's 5 million wells in the United States, and there's 1 million of them active, right? So we got 20% of the country has active wells. Now, don't get me wrong. More than likely, what's an average lease is you might have like 150 wells, 75 of them work, 75 of them are offline. Now, what I've really understood with the industry and why I liked this space was there's money to be made with those almost in the same way that if I bought a subdivision that had a bunch of extra lots with it, and I could go build some more houses, that's kind of how it is. So there's two different ways you can make additional money beyond buying production. One is going back in and fixing those wells. And if you can imagine, if you got an operator that's used to living off their money every month, they don't always want to gamble on putting money back in. So
Right.
when we raise money for a new deal, we're grabbing additional funds to go do that up front because the success rate there, if I put a well back on, even if it makes a barrel a day, let's say $60 a day in the current oil environment, that's $1,800 a month. I mean, it adds up pretty quickly. It's that's where I like the opportunity. It doesn't take too much. It doesn't take too much to see the fact that there's a ton of oil operators that are retiring as well. I mean, if you think about the age bracket of the average oil guy, I mean, you probably don't know them because you're not interacting with them, but I do. And, they're in their 70s and 80s and they're still killing it. I mean, they're what built America. I mean, hats off to them. They're seriously dedicated individuals in the oil and gas space, but there's far few people coming back in to go after the smaller stuff because
Yeah.
if you're a giant oil company, you have no interest in playing around with these small production. It's just a headache. And if you're a small guy, most of these guys are bootstrapping everything. They don't know how to raise capital. They don't know how to structure deals. They're just going
Yeah.
in and saying, "Hey, I made 50 grand here. Let me go buy another well, or let me buy another lease." They're not going after $3-5 million assets. So
Yeah. Yeah. So to kind of compare it to like multifamily, I mean, there's, institutional folks are only going after big properties, like say 30 million, 50 million plus. Then you've got a bunch of deals that I'm in that are like 10 to $40 million properties that we've raised capital for. And then below that, you've got, you can't even afford to have on-site management because
correct.
the property's not big enough. But there's only people that will play. Usually people play in one of those levels, right?
Yeah. I mean, so for me, we want to identify there's multiple fields in the area that we can bolt together, right? So I'll give you an example. I just bought a field in East Kansas, paid $1,050,000 for it, $1,050,000. There's two other fields nearby we're already about to go into contract with for about $2 million each. And then there's another one for like $1.5 million. By the time I've consolidated, I should have about a $10 million purchase price, position into these guys. Now, keep in mind, oil's suppressed right now. So we're in a $55-$60 environment. That's where it's bouncing between. When I go buy deals, I'm buying based on cash flow. And when cash flow is down, because you have your fixed costs regardless of where the oil price is. That's what's interesting about oil and gas. You're playing on a couple of different metrics. One is commodity price, but also decline of the well. So a lot of people don't understand that drilling a brand new well is great, but if your production doesn't come online in the right environment, so meaning if oil prices are down and you're drilling a brand new well, you may not recover your initial capital in time. And kind of like shaking up a soda bottle, it's going to spray out. You got that initial carbonation. Wells are kind of the same way. Your first year of production is typically equal to another 4 years worth. So if you don't
Hmm.
recapture your money pretty quickly, sure, you get some tax savings, but you could be ending up in pretty big trouble.
Yeah. So to make a few more comparisons to like real estate,
Sure.
you've done a lot. You've spent a lot of many years like finding distressed sellers, finding
Yeah.
good deals. Like it's kind of the same. You're like, what are some properties that are adjacent to mine? I have some efficiencies where somebody might do that with rentals. Like, hey, I've
Correct.
got 3 houses in this neighborhood. Like, why not have 10, right?
Yes.
And so, and you also are, like when somebody's distressed, it could be they're older and they just want to get rid of this thing or whatever.
Yeah.
Like, talk about like how you find deals, like maybe
Sure.
in comparison to real estate, and make a couple comparisons there.
I would say that's probably the biggest difference. So when I first got into this space, I did the typical real estate investor thing. I called every operator in the United States. So we had about, there was like 14,000 people on the list, and which isn't crazy. I mean, even Texas only has about 10,000 operators, which
Hmm.
you would think like that's 10,000 different companies doing the business. That's not that many considering Texas produces more oil than anywhere else in the earth.
Yeah.
So it's pretty nuts. But yeah, we just cold called them all. And most of them told us like, go away, who are you, whatever. But then some of them would talk to us for a few minutes and, they had smaller production. Maybe they were a 2, 3, $4 million company. And they'd talk to us. They say, you know what? Look, son, you sound like a nice guy, but I don't know you. I don't trust you. So I'm not taking your money. Have a great one. And they click. And it was an interesting, it's probably happened about 4 months into the business. First 3 months, I just spent sitting on a couch. I literally hired a reservoir engineer and he taught me on a whiteboard how to do the business. I mean, not necessarily every step, but he basically helped me eliminate different strategies because I didn't know initially I was going to go in and buy existing oil wells. I was like, okay, maybe I'll go drill, maybe I'll do this. So we went through every different kind of vertical in the space and said, okay, which ones do I like and which ones don't I? By that point, month 4, I'd bought an asset. And then that's when I realized I was like, hey, I need to talk to more people because the one I got was just a coincidence. We just happened to run into a guy, but I needed more. We started reaching out. Nobody wanted to talk to me. So it became a credibility thing. That's why we did that big sponsorship. I'm kind of spidering off in conversation here, but we became the main sponsor of the largest oil event in the country because that created a lot of excitement. And people were like, who is this guy? He wants to buy PDP. Why does he want to do that? And what's interesting is the whole industry back when I started was not talking about buying existing production. Everybody wanted to drill, baby, drill, drill, baby, drill.
Yeah.
I'm not buying the old stuff. We want to drill. Well, now, today, 3 years later, and a lot of marketing on my part, I like to believe, but there's billion-dollar companies now with the business model that I have. Like they've started to, now don't get me wrong, they're not buying $1 million fields, but to them, a small field is like a $10 million deal, $15 million deal. And they're trying to do a consolidation play on that stuff, which is interesting because nobody wanted to do it when I got into the space. Everybody just said drill, drill, drill. And now they're talking about risk mitigation further. And they've started talking about cash flow and how predictable these fields are, whereas nobody else wanted them before. So yeah,
Is that a play, like, even in real estate, there's certain tools during certain markets, right? In a down market, you do different things differently than an up market. Is that a play right now with oil prices down? Like, don't take the risk for drilling because it's exploratory.
some
Like,
of
just
them
buy
have
the
to.
stuff that's already.
So what's another interesting piece, and you'll see a lot of drilling projects still raising capital right now, even though oil's at, like, today was 60, but yesterday was like 59. For example, in the Permian Basin, West Texas, which is the most, prolific basin for production, there's been lots of studies that say break-even pricing on drilling out there is between $62 and $64 per barrel, meaning if oil prices are below that, you're not going to actually make profit. Now, people will ask, like, why would a company keep drilling if they aren't going to make profit? Well, what happens is when you have tier 1 acreage, which is what it's out there, you're under a lease that initial 3-year period. You may have signed up for drilling 10, 12 wells a year, 20 wells a year, if you have a good piece of acreage. So they're required to keep drilling in order to keep that lease active. So whether prices are up, prices are down, they got us to keep drilling. I've heard of
Right.
horrible stories about COVID time when oil went down heavily and guys were still drilling brand new wells because they had to in order to keep their lease current. So you're like throwing away millions of dollars every month just because you have to keep your lease going. Um, so yeah, I mean, it's, I would say the model is appealing, to this price point of market. But before, I would say that from my understanding, and I've got guys on my team that have been in the game 25 years, PDP was never a big, exciting topic like it is right now. Don't get me wrong, I'm a minnow in the space, but I am very loud in the space in the sense that the senior vice president of ConocoPhillips called my attorney and asked who the heck I was. Like guys like that who reached out and asked who I was when I first came on because I was so loud in the space. Think of like this, very quiet, keep to themselves old boys club. And then you got me buying a 2-story booth, giving away a $20,000 watch and having a bunch of hot girls at Napes. I brought some attention. I mean, I had a pinstripe suit with One World on it and, I just created a lot of buzz. So, even though the majors and I probably will never do business, but they still knew who I was. And that gave me credibility now when I'm calling. So the whole point of the conversation was I wasn't initially able to reach out to them and just make a call and lock it up. Now I have guys every day sending me deals. So people will call me up and say, I had a guy, this morning, Alex, I got this production, it's 50 barrels a day, it's over here. I just want a commission on it. Can I introduce you to the owner? That's the type of introductions that really make deals happen. Anytime I've done cold outreach in this business, it doesn't really work. It's kind of a warm, fuzzy handshake type business. Everybody wants to know each other.
So unlike in real estate, we all know the value because you can look at the MLS,
Yeah.
specifically for single family, right? The value is kind of a market a condition. Obviously, oil prices are set by the market, but in terms of somebody telling you, hey, this well does 50 barrels a day or something like that, how is that verified? Like, you just, I mean, I guess that's part of the process is
Yeah.
you kind of underwrite it and you're like, well, let me see that for myself, or how does that work?
So there's a few components here. So for one, you can't always just buy necessarily in a multiple of cash flow, because when I go look at a deal, it may be making 1,000 barrels a day right now, or 100 barrels a day, but in a year it might make 90 barrels. It's declining over time. So production does decline over time. The natural formation is going to start depleting. Now what happens is the bigger wells, the bigger fields, they're depleting faster. So if you got a brand new well, the first year it might deplete 40%, production might deplete 40%. So you really need a reservoir engineer to evaluate these deals, because not just the multiplier of production and expenses, you also have a decline component to take into effect. But yeah, when you're looking at the deals, I forgot your exact question.
Well, it was just like, how do you just,
Verify. Yeah. Railroad Commission. So in Texas, I mean, every state has their own regulatory body. They're the people that keep track of making sure your wells aren't doing anything silly. You don't have any, crazy violations. Your signage is up. You're creating a safe environment with your wells. So the Railroad Commission is our regulatory body here in Texas. And essentially every single month you're required to go online and report the volume of production that you made, and also your sales. So if you think about it like this, oil's an easy example. I have tank batteries on each field. When these wells pump, they flow the oil into the tank battery. Once the tank battery hits a certain barrel amount, normally 140 barrels, depending on the gatherer, they'll come out and they'll pick up that oil for me. They'll give me a sales ticket and say, hey, we picked up 140, 150 barrels, and then they write us a check, right? Well, the Railroad Commission or whatever regulatory body will verify with these gatherers that, they're being sold, the production's being sold, and we're taxed and everything else on these volumes. Like it's a big, I'm pretty sure it's a felony to actually incorrectly report your production. So you have to every single month report what's going on, because there's a bond in place too. So in order to be an operator, like in Texas, you got to put up a bond, and then they give you a operator number and all the documentation behind that. And then now you can legally operate your wells. So that production's being reported. So what we typically do, because we don't trust operators still, even though, like, I've caught some guys in some multi-million-dollar a year lies. So we'll want to see the actual tickets. So we'll look at the tickets, compare it to the Railroad Commission, and then also with their expenses. I oftentimes reach out to their vendors. So it's gotten to the point where I had a field, it was about $11 million deal we were trying to acquire, and I caught him in over $1 million a year in hidden expenses. It happens though. And the problem with that is that deal was probably making about $2.5–3 million a year, $1 million in expenses. That really messes up your margins.
Yeah.
With your debt service and everything else.
Yeah. Well, if in the instance we're talking to somebody, or somebody's listening to the show and they're like, hey, I'm a real estate investor and I think I want to get into oil and gas, aside from reaching out to you possibly, like what's the advice you would give people?
I would go the mineral route. I'll tell you why. I mean, I probably had a couple $1 million in mistakes in this business, like actual, like, cash out of pocket mistakes. And a lot of it was just understanding what kind of infrastructure I needed, the team behind it. I mean, it's not like in real estate where you have like an acquisition guy you're paying $36,000 a year base. My reservoir engineers range between $175,000 and $250,000 a year base. So you got to pay some pretty serious salaries, geologists, even the legal is very expensive too. Like on $1 million deal, my legal is probably $30,000. Just being looking through the title, giving a title opinion on it. It's not like real estate. We have title insurance. You kind of have to create your own search. So that's why you have a legal team that goes in, examines all the mineral documents and stuff. But being a mineral buyer is a lot easier, and also there's a bigger pond to fish in, and the dollar amount's smaller, right? So
explain what that is, like a mineral buyer. What does that mean?
yeah, so essentially the way the oil and gas business works is you've got your acreage, the subsurface underground stuff is owned by the mineral owners. Maybe there's one, maybe there's 10, whatever. Whenever this oil operator goes and drills a well, they're giving a royalty every single month to that mineral owner. So maybe it's 15% or maybe it's 25%, depending on what that lease term says. So every single barrel this oil operator is extracting from the ground, they're giving a cut of whatever their revenue is right off the top before expenses and everything. So if they're making 100 barrels a day, and you got 20% royalty, you're getting 20 barrels of that a day right off the top. It's almost like a franchise fee. So what's neat there is it's easy to go in and evaluate their cash flow because you go look at their production volume online, you compare that to what the mineral ownership position is, and you know immediately what the kind of cash flow checks are coming in. So you can go in and buy these fractional mineral ownerships. I mean, you can buy a list of, I mean,
It's like the mineral right. You have the rights,
yeah, you have the
and
rights.
the person that's paying you is the operator that's in there actually
Correct.
extracting it.
Now, I would
Yeah.
not, whatever you do not go buy, unless you know what you're doing, of course, but don't go buy acreage that doesn't have production on it. You know, there's a lot of people, there's even companies in transition from real estate. I won't name them, but you know, they do the real estate seminar method and they pitch minerals, but they pitch non-producing minerals, meaning there's no oil wells there. They're just hoping one day somebody comes and drills it. Maybe they've got a hot tip, but then you're speculating. I mean, that's a complete speculation at that point. If I'm going in and buying mineral ownership that already has cash flow in place, I can look at that cash flow and make an assumption on how much money I want to pay. Now, don't get me wrong. You've got to really understand how wells decline over time, because if it's a brand new well, your checks might start off at $1,000 a month. And then by the end of the year, you might be at $300 a month. So you got to be careful here, but really understanding how wells decline and the engineering components is probably your first step in all this stuff. It's not an easy business. I mean, I wouldn't have lost millions of dollars making mistakes initially for my first like 18 months or so, just, you know, because I'm a dumb guy. It's just a very difficult business. So
Yeah. Well, there's this phase of learning before there's the phase of earning sometimes.
yeah. No, I had that. And it was a bit of a kick, you know, because I came from success on success, right? Like real estate investor, massive success, millions of dollars a year. Yes. Then call center did well with that while I was doing both at the same time. I mean, I lived a pretty, you know, turnkey life. I mean, I woke up every day, I worked, you know, 20 hours a week, and my business ran itself. It was really nice. But that's where I kind of pivoted to oil and gas, because I was like, you know what? I'm being lazy. I was only 30 at the time, or 31, I think. I was like, you know what? It's time to do something exciting where I'm going to push myself, because otherwise I'm just going to end up being a fix and flipper the rest of my life. I didn't want to do that.
Yeah. Yeah.
Yeah.
Awesome. Well, Alex, thanks for sharing your story. If folks want to connect with you somehow, I know you've got investment opportunities, you've
Sure.
got a lot of knowledge here. Like, if they wanted to connect with you, where do they go?
Yeah, I mean, my Instagram is probably my main one. It's just my name, Alex.Ottewell, but OWP Capital Group is our fund. And you can actually go to investinpetroleum.com. I own that domain, which is pretty crazy. So I was surprised to buy that guy. But yeah, it's an interesting business. I mean, it operates on cash flow, right? So cash flow and expenses. And the neat part, actually, this is one big thing I would warn about. If you're going to go into a drilling project, just look at their track history, you know, because what I'm doing doesn't really require the same level of skill, I would say. You know, I'm buying cash flow, right? I'm basically checking out P&Ls and just putting an operator in place on my team to run it. But when you're drilling a well, I mean, it's a big gamble. So just be cautious when you're investing in a lot of drilling projects, because, you know, everybody wants to be super positive, and don't get me wrong, I want them to be successful. But if your the best part about your return is the fact that you got a big tax break, it's probably not a win, you know, at the end of the day.
Yeah. Yeah. Awesome. Well, thanks again for joining me today.
Cool.
Yeah,
Appreciate it.
we'll share the links that you just mentioned down below for Instagram, for your website. So cool, everybody. Thanks for joining us today. Interesting show, right? I think at the end of the day, I've said this many times about real estate. After, you know, when I first started real estate, I was in love with real estate. But after you do hundreds of deals, like you don't care about the real estate anymore. You care about what it can do for you. And there's a lot of other things that can do that for you that are not necessarily real estate. Oil and gas might be one of those. So appreciate you joining us. We'll see you on the next show.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.